Can you hear me now? Oh, there we go. My mic's on. Cool. What's up? What's up? What's up, Lex? What's up, Sciatica? Mr. Sciatica. How are you, man? It's been a few days since I last streamed. I'll wait till some more people hop on. YouTube. I had to revert back to NVIDIA broadcast, like this program that I use for noise removal on my mic. I think it's working again, just like the good old days. Speaking of the good old days, let me open up the old music, the old playlist, just for nostalgia. It'll sound better. Feels like 2020, 2021 all over again being in... It's like... Yeah, man. I can't remember what songs I used to use back in those days. Got some of the lo-fi chill beats. Just have to get my levels right with the mic so it's not too loud. Let me know if the music can go up a bit or down, either way. So I was looking at this like three-way view as the S&P 500 futures market opened. It evidently made a huge gap down. There's this gap, this gaping hole. And we all know what happened last week on Friday. Really nasty crash. Like, this is chaotic. This is all in wake of the tariffs, right? All the FUD around the US tariffs, Donald Trump. So ultimately though, I was looking at this earlier, Bitcoin's holding up really well in spite of all of that negativity coming out of the stock market. Let's see if it sort of shows on the comparison here. Yeah, it does show. Like, so if you take a relative low in the market up to a relative high in stocks and crypto, Bitcoin's up here and the stock market's all the way down here. So this is that difference. Bitcoin seems to be weathering it a little better. And actually, you can see where people started leaving Bitcoin sooner than the stock market. The stock market was still up over here. And Bitcoin was down at that point already. So I feel like we got a lot of the negativity priced in with crypto and Bitcoin already. That's my theory on it. There's a couple of things I wanted to sort of talk about with as far as what's happening right now on the daily time frame. And that is the death cross. There is a death cross that just happened. Now let me show you in a bull market. We've had these before, the daily death crosses. Like there was one here. There was one over here too, the cross of the averages. But that didn't necessarily spell the end for the overall bull market. You know, the trend was still alive after that point. So what we need is a bounce. So this resistance that we had last year, this is a major pivotal level, which is $73,750. We're currently at 78.8. So we're still above the structure. We're still safe. We're still okay. We're still looking all right. If this is to get lost though, like if we lose that level, that's when things shift and we are looking at a broader downtrend. But I think everything's still okay. Everything's still healthy for the most part. The weekly, if you look on the weekly chart, we're still pretty elevated. We're actually we're sitting up on top of the 50 EMAs on the weekly. So maintaining that, holding the 50 weekly EMA is important. We need to hold that. If it starts to break down, then this is just the beginning and we're, you know, correcting further. So that's kind of like the line in the sand for me, is this, like this old resistance becoming or producing the support that we're looking for, you know, if it needs to go like that. But let me go into the split view. This was more so gonna be a stream of like just watching the potential bounce, because that's what could be happening right now. We might be seeing some kind of low or like a bottom put in on crypto. At least you know, that it very well could be just a dead cat bounce, so to speak, like where, you know, a crash happens and there's some level of a bounce, but then it continues to go down. The classic dead cat bounce, but hopefully it is a turning point. Let me just open up the chart that I closed. So we'll leave this one over here. This one's the Bitcoin chart. There we go. Okay. All set. I really want to see XRP reclaim $2. It's kind of threatening to lose this triangle idea, you know? Like this triangle is really getting tested now. Just to sort of check any other kind of trend lines, I think there's another one here For XRP, it's like kind of like that. Maybe I'll make that a different color just so that you can track the progress of that line. We've also got it does look quite like falling wedge kind of. It's got that kind of vibe to it. I want to see if this line links up with anything over here as well. Like, is there any kind of structure? Yes, there is. There's that low. So if you link that low up with these lows here, I know it ignores that. That is just a wick. It's a very violent wick. But you get a little bit more uniformity from these lows. Call it bias, call it what you will, but... And then from this perspective, there's a trend I want to draw like that, but I know it ignores, like it excludes. So this idea excludes that, and it excludes that. So we've got some bottom side exclusion and some top side exclusion, but the majority of the activity is living inside this falling wedge right now. So this idea, we can abandon this idea if we break down through it. Like if that gets lost, if this trend line here gets lost, then we'll abandon that falling wedge. Now falling wedges are bullish, but yeah, it's sad to see this thing, this big yellow triangle is getting really threatened right now, because we've had a daily, I think a daily close outside of it. If I zoom in, yeah, yesterday's candle closing outside that boundary. It's not great. Hey Turbo, got your bat signal. Good, good to hear you too, man. Bitcoin. So look, I mean, what's happening on the 4 hour here on Bitcoin? Look at that could be the start of something. Just like over here, right? You had the start of something. Could this be a double bottom, you know? There was something interesting on Bitcoin that I was looking at on the Bitcoin index chart. If I go on the daily chart, look at this triple, like this W thing. It's like a triple. It's like an inverse head and shoulders thing. We kind of had that a little bit. I mean, this is a bit of a stretch to say that it's the same, but you had 1, 2, and then could this be another low that sort of is at least in the neighborhood of the previous lows, just like what these were, you know? Enough of a mattress or a springboard to bounce us and trend us back up. Because lows can look like that. Lows can look really shocking and devastating and unrecoverable. And it's like at those devastating times, you know, is the pivot. The pivot happens at the most painful time of the drop. You know, it's been very painful. But there's reason. There's reason to say that there's like a little bit of a test of previous support here. It's trying to double bottom, you know. The real tell will be if we can hold $76,800. That's kind of like a local line in the sand. A more macro line in the sand is this 73,750, which is the previous high of last year. That's the, you know, that was the This was the high that we achieved before halving. This was the new all-time high. You know, because the old all-time high was over here. That was old all-time high right there. Halving was in like April of last year. Like, I can't remember exactly what date it was, but it was like there or something. Let's see how far, like, let's see how close I was there. Bitcoin halving 2024 date. April 19. Well, oh, look how close I was. I was 18th. So 19th was the day of the halving. Look at that big Darth Maul candle. Right there was the halving. So a lot has happened since the halving. It's almost been a year since the halving. We've almost gone 12 months. It took a while to get the show on the road after the halving. It took a long time, months. It took the election, you know, like crypto was just waiting for that catalyst, you know. We got it. Got the markup. Got the double top. Nasty double top, sadly, for now. And then it looks like, is there any kind of pattern that we could be suggesting for Bitcoin right now? Is there like a falling wedge? There's definitely a trend line on top I can see. Just link this up, you know. This trend line's very important. We have to pay attention. When this breaks, when we truly close above that on the daily chart, we know that something's shifted and we're starting to build again. So keep your eye on that trend line. Try to reproduce that on your charts too, is what I think. And then this trend line here, it's similar with XRP. You've got like this falling wedge scenario coming in, which can very well get, you know, invalidated if we break through it. If we break down through it, then it's, you know, back to the drawing board. Excuse my voice if you can hear the difference in my voice. I've got like just getting over a cold. Been coughing a lot and it's like killed my voice. Yeah, man, look at that. Falling wedge. We had the last big pattern that we had, the last big macro pattern that Bitcoin had was the falling broadening wedge, which was like that. So yeah, it looks so similar to here, doesn't it? It looks like we've just repeated that, essentially. Like we've done a Wyckoff distribution. Let me just repeat this, just for fun, you know, get a fractal going. I don't know if it's going to do that. And then you could argue that this thing here was this thing here. You know, except just from a different time scale. Like we had this is more of a falling wedge, actually. That was definitely a falling wedge. That was a beautiful falling wedge, actually. And I would argue that's what Bitcoin's in right now. is some kind of a falling wedge. So maybe it's not that. Maybe that is that. If you want to go into fractals, let's do some hopium right now. I need some hope. Let's grow this. Let's grab all that, and we're gonna duplicate that little pause over here. Now we do need to make it bigger to fit the scenario. What about that as a fractal? This kind of defies time frames, but there's no correlation here with over here. Like, so there's a growth here, there's a decline over here, so doesn't match that section. So if I'm to truly cherry pick that part of the chart, I have to exclude. I have to grab it from like here. And then grow it. Let's match the magnitude. Probably like that. Could you imagine? That is like $165,000 Bitcoin roughly. That would be cool. I'd be happy with that. But as you know, markets don't repeat to that level of correlation and like perfection. You know, it doesn't. Because if they did, if markets correlate, whoop, hang on a minute, where did I go? If markets correlated like this closely, that means you could find this whole section of activity in Bitcoin's history somewhere. Like, where was Bitcoin's bull market top that did that? There was no. It didn't. It never did that. It's always been a blow off top. So that kind of throws that sort of game out, I think. It doesn't mean they're like totally redundant. Like, they can still be useful, pulling fractals, but it's more so just like a behavior thing. Like, this is how a chart can move in this pattern, and here's previous examples of it. Let me duplicate it and show you how it could pan out, you know, as something realistic. Where does that put Bitcoin? About $165,000 if it was to follow that fractal. Randall. Rockets. Now, what other... let's talk about what indicator, what time frame, okay, what indicator using what time frame gets you out of danger? Like, what gets you in and out of the market safely? You know, like, you want to get in, you don't want to miss out on a run, right? But you want to get out before shit hits the fan, and shit has hit the fan. Let's check it out. Okay, so I think the daily's a little bit insensitive. Let's chuck on an EMA. Actually, let's use an SMA. Just a simple moving average. I'm gonna put a 200. Make it yellow so we can see it. Yeah. Let's check the weekly. No, okay. See, I think the daily's a little bit insensitive. The 4 hours nice. The 4 hours good for catching swings. So as a rule, this could be a strategy. This could be a system that you could follow. I'll type it out. When above the 200 EMA or SMA, and I'll put in brackets 4 hour chart. Okay, and I'm going to say long and then as a rule for closing that long, let's make this an anchored thing so that it follows when we move around. Okay, and then we gotta do the same for the shorting. So open short, and it's just the inverse. You know, it's the opposite. When below the 200 SMA 4-hour chart. Excuse me. Got a nasty dry cough. And then close the short when price crosses back over. So let's put those plays into practice. Okay, so long. Let's do a long first. Let's just take a very cherry-picked obvious example would be, and let's use a green line. So now you got so much signal through here. There was so many, like, you can even play the small swings really, but check this out. You convincingly got back above the yellow line, right? The SMA, sorry. In this case, you can use an EMA. You should switch between the two. And see which one gives you better signals, like a clearer picture. But this is just an example of using the 4-hour chart with a 200 SMA. And if you're above it, you're long. Like you are long. Now, the trick is, don't take the long like part way through. Like you can't take it up here, you can't take it up here, you can't take it over here. You have to take it at the cross. So you can only get in when it's just crossed, you know? It's like getting into a taxi, getting into a cab. You don't get into it when it's driving 80 miles an hour on the highway. You have to get into it when the cab has stopped at the, you know, on the side of the road. That's when it's safe to get in. That is like here. The cab is pulled up with the door open. You can get in safely here, right? That's fresh. So think about it like bread. Like you don't eat bread when it's stale, when it's been in the cupboard for 3 weeks, right? It's gonna be gross, it's gonna have mold. Eat it when it's fresh. So get into the long when it's fresh. It is fresh here, freshly crossed up over the moving average. Now, where do you get out? You get out when it crosses back below. Where was that? It was here. So that's where the long gets stopped or closed. It's like, yeah, there were better opportunities to get out up here, but you know, for the most part, this is where you, and that is a good trade. That's a good swing right there. That caught all of that. You were in and you were out. And then let's do the inverse. Let's go So let's get a little arrow. Maybe I'll just freehand it in a second. Let me get a bold enough. So we're gonna call this the long line. Like this is the long. So it ends here, starts there, ends here. And I'll make that green because it was a long. And then we'll do the short example. So essentially you could get short. As soon as you close your long, you can get short. You know, open a short when you close your long. And then, by the way, your stop loss lives at invalidation. So this short, if this was a short to take, like let's say you got short here, right? Let me go back to a white line. Let's say you got short here, right? Your stop loss is when, or you stop out, you close it when you get a 4-hour candle close back above, because that's a long signal. So this is the problem with this strategy, is that it would get you long again and it would close it here. This was a mess. Like when the chart goes sideways like this is when this strategy is ineffective or not as effective. But it's worth it if you want to capture trends like that, like, because it does get you in those. It does get you in them. So if you're prepared to stop out a number of times just for the benefit of getting in a run like that, then that's the price you pay, right? Oh, there's a demonstration? Oh, let me just stay on track. Okay, so that was a win. That would have been good to take that. The short would have been in profit, but then it round tripped and it stopped out at a small loss. Like, so you would have entered like down here somewhere, but then you would have got stopped out here. So it's like, okay, and then you would have got long, right? Because it's a signal for long, so you would have got long and then stopped out on the long. So you would have been twice stopped out from this area using this strategy. So twice stopped out. You would have opened a short here and round tripped it and stopped out here again. You went long, round tripped it and stopped out here. So that's a lot of like noise that didn't really take you anywhere. And you know why? Because look at what the average is doing. The average has flattened. See the yellow line? It's like it's flattened. It's gone flat. So maybe you want some angle on the moving average. So maybe this theory is good to use in conjunction with another line, like another. And this is essentially, I mean, this sort of sounds like golden cross, death cross trading strategy, right? Like where you use a 50 and a 200. So instead of price crossing to give you the signal, if you use another average, like another SMA, let's change the color to like blue or something. And change the input to like 50. Okay. So this is where that strategy, they're sort of coming full circle here. This is like where this is where that EMA cross strategy is. So if you can use SMAs, but EMAs work too. But like you essentially you get long on the cross up, and you stay in the long until the EMAs cross back down, which happened over here. So that it's very similar to that. So it's like you either use another average or you just use the price as like your entry exit. The good thing about a moving average is that it's less noisy. Like it's not as noisy as price. Price is very noisy. Moving averages smooth out that noise. At least that's the idea behind them, right? If you move this up to a 100, see if it does anything. That's even smoother. I guess the lower the length, obviously, is the tighter the action and the more noise you get. But yeah, that's one strategy. It's like when things are above the 200, I'm bullish. When they're below it, I'm bearish, you know? Like you can really boil the market down to something as simple as that. Let's go the EMA again. EMA, change it to EMA. Make it 200. Yellow. Let's go daily. So above the 200, bullish. Below the 200, bearish. So yes, we are bearish at the moment in that context, you know. Like if you're using a cold context of like, you know, it's not sentiment, it's just purely technical. It's like price is above the 200. I'm bullish, you know, and that's rightly so. You get below it, you get bearish. Okay, maybe it comes back up and recovers it. Okay, I'm bullish again. So you just and it gets you relatively in tune with the market. If you want to get more in tune, just drop the time frame because the daily is quite insensitive to fluctuations in the price. So if you go back to the 4-hour, you know, you can see we've been bearish because we're below the 200. This is kind of like Ishimoku as well. Like, check it out. You get the Ishimoku cloud. Let me just remove the EMA and I'll get rid of the divergence indicator as well. If you go on the daily, look, the cloud's been bearish for a while now. It actually flipped over here. If you go replay and you hit play, look what the cloud says. I'll pause it when the cloud says to get out, or like when it warns of danger. When you get what's called a Kumo twist. So in Japan, the word for cloud is Kumo. So these things are, it's called the Ishimoku cloud, but it's the Ishimoku Kumo. So there's a twist there. Things got twisted up, which is indecision. Like that's a bearish signal right there. Price has entered the cloud. So let's say you got out on that twist. Where did that twist happen? Can I go back in time? Anyway, it was probably that drop there that happened on the 7th of January. Things started to get a bit strange. Yeah, so this lower high, this is kind of like a signal too, because like look, you had a high and then you had a confirmed lower high. The first lower high. And that's when you got the twist. So that was like a little telltale. So the Ishimoku on the daily is a good system to basically be paying attention to. And if you follow it, if you use this like strictly, you'll get out before things get really damaging and ugly. Just as well as when things are bullish, when it flips green, it like forewarns you. Because look, let's go back to the replay of back here. Yes, there was a lot of twisting and signaling all over here, but I just want to go back and watch it. Let's go like twice or 3 times the speed. Look at what the cloud does. So bearish flip. bullish flip almost. There it is, there's the green, but then it flips back red again. So there's a lot of mixed messaging happening here. But that's a good start there. This is kind of cherry. I know this is cherry picking because we've just found a really good time in the market, but that cloud, it told you what was up before the move happened. The problem is that it false signals a few times before it actually something sticks. And that's what you get. And look, okay, there's the first sign of danger was that little cross down. Another cross down, not good. Huge cloud rejection. So this is the daily Ishimoku cloud indicator on the daily. So you can see we are very underneath. We're not looking good. This doesn't look bullish. You know, if you want to wait for safety, wait for the cloud. Wait for this daily Ishimoku cloud to Kumo twist. You need the cloud to twist colors again, change back to green. Because right now you're underneath it. It looks, you know, let's go back to the bear market of 2022. Like, that's how it starts. Like, you lose the cloud, you get below the cloud, the price gets real ugly. There's some moments of hope, like where it, you know, it got back up, everything was green, but then you lost it again. So yeah, if you're in tune with something like that and you stay committed to it, like, you know, you stay with it, I think that could be cool. That could be useful, right? Anyway, let me go back to the split view. What's happening in XRP and Bitcoin, and okay, the SPY futures is trying to bounce. There's still a gap, big gaping hole there. There's a gap. Bitcoin's trying to establish a low, like a bottom. So is XRP. XRP seems to be just duplicating what Bitcoin's done, which is interesting recently because in previous market moves recently, XRP has actually cut away from Bitcoin. Like, see, those parts look pretty different. Like, you had massive down here and growth from Bitcoin all the way up to here, but XRP just sort of chopped. XRP was way choppier than Bitcoin. Bitcoin was a bit more on trend in that section. So, but at the moment they seem to be getting back in tune with one another, at least on the hourly time frame. Yeah, Fibonacci's. Let's look at that. Is there any kind of Fibonacci hints on the charts? Let's look. Okay, this is Bitcoin. I'm gonna zoom out a bit to the daily. Let's pull a fib from that wick low to that wick high. And we've been trying to hold the 50, the 0.5 Fibonacci level. The golden pocket is right pretty much at a retest of the old high. That would be a really nice test to come and get, you know, maybe go wick 70,000 and then bounce from there. That could be an interesting level. What about locally? What about a Fibonacci from the top down to the low? These would be the resistances that we have to track. Looks like there was an initial rejection by the 382 fib. The 0.5 fib level somewhat lines up with these lows. It's a very loose correlation there. It's not super tight, but what about a macro Fibonacci? Is there anything happening on the macro? Probably not. Like a 236 maybe? The 38, look at where the 382 lines up. The 382 fib level lines up with our old high. Look at that. That would be a reason to find bounce at the 382 fib level. You know, if this just kicked down once more, created like an inverse head and shoulders and then came up. See that happening. But yeah, we already looked at this one, like that low there. We're trying to maintain the 0.5. We're trying to reclaim and use that. Thanks, Rodriguez. Hey, Rodriguez. Sorry, I might have a bot that's like retracting certain words or whatever, and it gets deleted instantly or whatever. I'm not sure. Unless you deleted it. But you're welcome. It's great. It's good to be back. It's good to stream. Is there a channel? Is there like a... I'm just trying to find like evidence of other things happening. So, okay, so from a logarithmic perspective, there seems to be a parallel. I have to adjust this a little. Maybe it starts from over there, actually. There we go, it's starting to... Let me just turn off the extension. You can sort of see, like, if that's a touch and that's a touch, like the top's here and then the top there, that kind of parallels with a lot of the activity on the bottom side too. Take it to there. So yeah, there's a little bit of action chopped off there. Just trying to find uniformity, you know, you're trying to find harmony in a channel at the cost of excluding this little section there, which is still in parallel. Have you noticed that? Like, because even that, if I zoom in on that activity, look, that is still in parallel with the big large one, right? Look, like sort of like that. So while it's outside of the behavior of the rest of the price action, at least it's in parallel. So that's kind of our direction, that's our trajectory, if you will. So in that regard, we are still firing up this channel at the same trajectory. I think if we really convincingly lost it, something like that, and that's like, okay, cool, the channel's over, like the channel finished. The fact that we didn't come up and test up here, like, you know, with this mark up here, like if it came up and got to 130k, that would have lined up nicer, like neater with this channel, but it didn't quite do it. It didn't make it. So could there be other channels? I'll keep that channel there. Let me just see if this if I can make another channel without breaking things too much. Okay, there's kind of like a recent idea here. I might have to delete that actually, so I can show this. Like, you've got parallel activity happening from there to there and from there to there. So there seems to be a parallel from here to here, A to B, and then from 1 to like 2 over here. So AB 1 2 1 2 AB. Could we get a 3? Could the 3 be the low, and then we see later on, you know? Could that be what's going on? And if we see, like, at that rough same timing, that puts us like at roughly $150,000 for Bitcoin, which would happen like later this year, like Q3. What's up, Alchemist? That would be beautiful, but as you know, things don't happen so pretty all the time like that. But that's, yeah. Trend lines are fun to track. Sometimes they give you like the best answers, you know, like if you track a trend line of resistance, it's like, okay, when that trend line breaks, you know that something's shifted, and you can get in with the new rhythm. Like, look at this one. This trend line was established at one point, right? Scribe it across. There's the first little break, recheck, and then off. Like, so that was very good. That was a really good trend line to be tracking. And then look, same on the support side. When you lose a support, you know that sort of momentum has shifted. So like, even over here, like, it was sharp here, but then it got broken. Anyway, I think the most important trend line was what I had up earlier. It's that yellow line there, and it's also there's one over here too, like that. It's a bit of a macro line. Mind you, the touches aren't they're kind of a little bit obscure. Like, it's one wick from over here for some reason, and then it lines up with these two. It's like, okay, there's something forming. But I'm going to keep these lines on the chart until they get invalidated, until one of them breaks. Hopefully it's not the bottom one that breaks. Hopefully it's up here, like it breaks out. Yeah, I hope so. I hope that mark is the low. That would be, yeah, that would be nice. A continuation of the bull market. That's what everyone's praying for. Everyone's got their fingers crossed, including me. It's like the fear that happened in the stock market. If that spreads to crypto, then yeah, could be looking at an early bear market, which is very, no one was expecting that, you know. Well, there might have been some, but it's very ugly. It threw the timing off like severely. Like if we bear market from here, like if that was the top, this is so deviated from, you know, that 4-year cycle scenario with Bitcoin. Now, just for fun, I'm going to pick out all of the phases in Bitcoin from the start of Bitcoin, right? Let's go to the daily. Actually, let's go to the weekly. We need a lot of data to fit on the screen. I'm going to hide these for now. Let's get the... delete these. Look at all this other TA that I've hidden. Let me just see what all that is. Oh, right, okay. Yeah, different ideas. Let me hide that. So, let's get all the halvings in. Bitcoin halving dates. Halving 1, the 28th of November, 2012. So let's get a vertical line on that date. November 2012, what was it? The 28th. Gotta zoom in. Oh wait, I'm on the weekly, so it was the week of Monday, 26th of November. So it happened in that week. Let me try and go to the daily. I really want to pinpoint it. But this is the first, like the first halving. I have to go back a fair way. All right. 28th, right there. Lock that in. I'm just gonna add an annotation. Let's duplicate that and drag it to the second halving. So 2ND. And where did that happen? 9th of July 2016. Of July, that's all the way over here. It actually dumped not long after the halving. 9th of July, 16, yep. Let's duplicate that, lock that line in. Now the third halving was the 11th of May, 2020. Monday, the 11th of May, 2020. Change that to 3RD. And then we need to make a fourth, 4TH. Did it change? Oh, there it goes. Okay. Now when was that? April 20. That's right. It happened on 420. Which is coming up this month, by the way. April 20. April 20, 2024. There. Saturday, 20th of April, 2024. Right there. Now let's zoom out and get the big picture. First, second, third, and fourth. See how they're all like similar. Now, have we deviated off track? Let's mark out the all-time highs as well. So this at one point was an all-time high, as was this, as was this, as was over here. Might have to go linear and just get that right on the nose. Right there. Yep. That one. This one. All-time high of $32, $1,200, $20,000, $70,000 or 69. So you can see, like, from a logarithmic perspective, the distance between all-time highs has been getting tighter and tighter, like diminished. But from a linear perspective, they've been expanding. The all-time highs have been expanding from each other dramatically. Could the market be recompressing? Like, have we seen like a super cycle, macro high type scenario? Well, yeah, now I want to get bear markets depicted. Let's use red for bear. Now, they can change depending how you define the bear market, but let's just take it from the top to the bottom. You know, bottom was in over here. So it's either your bull market or your bear market, you know. That was a very short. That was before the halving. Like, this is before there was any kind of like behavior patterns coming in, but nonetheless, that was some kind of a bear market. Well, you could argue that that's all just one big bull market and there was no bear market yet. Anyway, I think more of the patterns were found after the halving. After the first halving, you saw that's when the behaviors started to set in. But yeah, 2022 was definitely a bear, which started in 2021. Over there. Pretty much ended after, a couple of weeks after the FTX crash. Over here. Now, I'm going to make this green. Cool. And the current green box that we're in. I don't know. Does that deserve to be switched to a red yet? We don't know that yet. If that was our bull market, then damn. See how the bear, it doesn't even take that. It takes like 12 months to do. It takes like a year. But timing wise, like look, okay, if the bull went this long the first time, it was definitely quicker the second time. It didn't take that long. Let's see, bull number 2 is here. Bull 3, you could argue that these two are similar because some people say that the high was set over here, 65,000. The second move was not, was kind of manipulated, but I mean, markets are always manipulated. It's manipulated all the time, up and down. So I'm going to say that the second bull run lasted longer because we got distributed early in the cycle. So yeah, like look, no two bull markets have been the same. We've only had, this is only our 4th bull run in Bitcoin crypto, right? But look, if you're going by timing, we've still got some time left in this one, but maybe not if you're comparing it to the bull run of 2016-17, you know. So that's the thing, like you can't use such absolute frameworks because no two lengths of any of the cycles have been identical. They've been similar, but not identical. The most correlation we've seen is the length of these two bear markets right here. I think that's been the closest correlation when you're trying to match up each of the phases. But yeah, look, the top could be in. Sadly, that's the reality. Like it could have been something like this. Let's just play devil's advocate and go, yep, the top was there, and we've started another bear, right? Which means if that has to happen, and the bear is somewhat similar in length to the previous ones, that means we'll be done by January. So just the rest of this year's just, you know, corrective. And it might not go that deep. Like it might not even have to go that deep, you know. Like it could, maybe it does something like that and it just, you know, it goes sideways before kicking up again. And that wouldn't look too crazy. I don't think that looks too out of control and outrageous. Like what if it does something like that? It could. The 5th halving would be somewhere like over here. Leave there, just eyeballing it. Early 2028. Rallying into the halving and rallying after the halving has been a feature that's existed each time. So into it and after it, into it and after it, into it and after it, into and somewhat after it. We haven't got much after the halving. But yeah, like, yeah, we could, thank you, Rodriguez. Yes, we could like, maybe not so much bear market, like perhaps everything's going through like this big flattening, at least logarithmically. Linearly, no. Like linear things are getting more extreme, like price-wise. We know that. But this is just like sort of little theories that I'm playing with. I'm just messing around. This is nothing too serious, but just doing some exploration of ideas. Don't read into it too hard. But yeah, it's possible, right? I'm just talking possibilities. Yeah, I mean, if it's like a mini bear, the problem is like you could have called last year a bear market too, if you're going by that theory. Like this section here could have been, you could have considered that like a small bear market, really, because you didn't get any highs. You didn't get new highs for a while. Like it did kind of look like that. It was actually kind of crap. Things didn't really pick up. But then, yeah, it gets nitpicky. It's yeah. I don't know. I don't think anyone would be on board with that. We're still, we've still got our structure, by the way. We still have our market structure. What I fear is that we're here. Like if I go down to the daily chart and zoom out, is that yes, we're on top of our previous structure at the moment, so it's like roughly here, right? But that was the same as over here, like we were on top of our previous structure, like here, but then we did lose it, and then we could lose that structure, which is not the end of the world. Like if you come and recheck 50k, like as a worst case scenario, just like we rechecked 30 back here, right? We rechecked 30. We rechecked it triple time, like 3 times. Yeah. We could recheck 50 3 times over here. Just as like an interesting theory, you know, like a little idea. And then rip up if it does anything similar to last bull market. I think that's too obvious though. I don't think it's going to be identical to that, but we're still, if you were to say relatively speaking, we're still like over here on Bitcoin. Assuming that is the same pattern as what we've just come out of up here. Now let's go back to this chart. And go back to that split view. So things started, yeah, and it was kind of dead cat. Because things were looking like they were starting to turn around, but now we're coming back to the low area again, threatening the lows, especially for XLM and DOGE. DOGE is not liking this correction at all. DOGE is almost back to its lows again. XLM is below its lows from over here. XRP is above its lows from over here. So is Bitcoin. Bitcoin's above its lows from over here. Ethereum even is above its lows from over there. It's a big old bleed out. It's a crash, sadly. That seems to be the flavor of the month, of the week, probably of the month. Corrective price action. That's another thing I was looking at, is the quarters. Like, this is the 3 monthly chart. Let's go to this chart. In a bull market, so look at all the prior bull markets. How many prior bull markets included two quarters of downside? No, there's none. It's always either up. It's all green, or at bear markets. To get 2 3-month blocks of, I mean, we only just started this 3-month block, so it's too early to call it, but yeah. It's been annoying, it's been frustrating to see, yeah, that this has just carried on, like this downside activity. It's feeling like this section. Like, it looks like that. It's like we tried to get it going, but then it kind of just bled for some time, you know. Oh well. Warren Buffett's somewhere rubbing his hands together. All that cash. Yeah. Well, I'm gonna wrap this stream up. It's been fun just chilling out and trying to find interesting stuff on the charts to look at. But the cool thing is, the thing about a dipping market is it's the window to the next long. It's the window, it's the beginning of the next bullish play, you know? You need a correction to buy that dip. You need to buy the cheaper price to sell it at the more expensive price. You need a low to sell a high. So if that's what's happening, then so be it, you know? That's the positive that you can pull out of this, that, you know, there's a way in. There's a way into the market. If you weren't in, or if you weren't in as heavy as you want it to be, this is the market's producing the opportunity. And the entry to it, it might not be today, it might be next month, or, you know, 3 months from now, but either way, it's producing a move that you can take action on, whether it's, you know, today or next week or next month or whatever. So hang in there. Markets do this. Markets go up, markets come down. I think it'll come back up again, you know. It's just, yeah, it's just that part. We just have to deal with the reality that it's a dip. I don't know, like, there was a stream a couple of months ago where I said $90,000 was like a line in the sand. If we lose 90, then we've lost structure. And we certainly did. And that happened over here on the 25th of February. We closed a daily candle here, and that's when things really... That could have been a little exit door You could have got out there, even though there was that little relief pump. It wasn't enough to get things re-engaged to a bull market, you know, to like a bullish uptrend. It was still very much below the previous two highs. Like that, you know, the highs were getting lower highs, lower highs, lower highs. So just because there was that little brief pull, it wasn't enough to turn it around. It would have had to have pumped beyond 100,000 to reignite the market, and it didn't have the fuel. So yeah, that 90k line, the reason I say 9k was because of the lows. Like, look, low here, these lows, that wick low, this low, like this was like the line in the sand at the time. And this is like more of a medium term. This is not macro term, but this is more medium term. So you could have been out and sitting in cash waiting for evidence of support. Hopefully that evidence is this double bottom. Hopefully it becomes a double bottom. But you know, if we break down and we get daily closes below that, then it's not looking great. It's not looking great. So yeah, if you're in longs and the damage, you know, like let's say you got long up here, the damage has been done. Don't sell here thinking that you fixed the trade. You know, you're realizing that loss. If you sell, the best thing you can do is start from the bottom and build up again. So leave what is drawn down. I would leave it. Like, don't sell it, don't capitulate. That's what they want you to do. I think you like, if you realize that loss, then yeah, that's a shame. Like, the play is, if you get long up here, you have to have an invalidation fairly local to where you got in. Because look, you got in stale. Like, you got in late to the trend anyway. So to expect a staircase to heaven, I mean, we all hope that. I know at the time it feels like it's just pausing before it can rally again, but yeah, that's why it's important to have invalidations. And look, same can be said for going short here. Let's say you go short today, right? You got short somewhere in this circle. You got short. You need to have an exit plan if you're wrong. Like, if this is a recheck of a support, and it starts to like regrow and recover, you really have to look at and have an invalidation point. And maybe it's these highs here, I don't know, but just somewhere local. Maybe the trend line, use the trend line as an invalidation. Because if it breaks up, then damn. You're welcome, Alchemist. There's a lot of liquidity at 70 to 73k, so yeah, the market we will go down to grab it. Yeah, wouldn't surprise me. If we've got liquidity, like we've got long licks to go grab that are just, they're only local, then yeah. One last thing. I know I said I was going to wrap it up, but look, one last thing, the heat map. I want to open the heat map for Bitcoin. Check the liquidity. Let's get the largest view, the 1 year data view, and we'll work our way backwards. Because I remember looking at it, there was a hot spot, and it's down here at $65,000. There's a bunch of long liquidity right here that the market could possibly grab. It needs to fall another $10,000 to get there or more, right? But it's not impossible. Let's check the 6 month. Yeah, look how bright that is. There's that $65,000 bright spot of long liquidity that is under threat of getting collected by the market. Go down time frame, 3 month time frame. Look at all that liquidity that just got smashed. Mind you, it only got opened up recently anyway, so it's not old long liquidity. It's fairly fresh. It's only from, you know, partway through March, like 20th of March is when it started to really open up. But yeah. Alright, I'm gonna wrap it up. XRP's looking really scary at the moment. It's threatening these lows again. Bitcoin ain't looking so crash hot. It was a bit of a dead cat. Maybe there's going to be more carnage ahead. But all the best, everyone. Hang in there if you're just a spot holder and you're in it for the long haul. Like if you're in this for another decade, like me, then don't worry about the noise. Like this is all market fluctuations. Don't get shaken out of your, you know, your long bags, like your super long-term bags. I wouldn't get shaken out. Just look to buy more. That's what I would say, but not financial advice. All right. Have a good night. Have a good day wherever you are, and I'll see you on the next one.